Good morning, NACVA. The future's so bright for us in what we do that I just thought I had to wear shades. So how about that?
I love it, Greg.
It's time to get the party started.
Yes. So
Good
all of our
morning,
panelists,
everybody. We welcome you to our 1 hour conference version on this wonderful June 18th. Again, this is continuing education. Please treat it as such. It's not final advice. We have a phenomenal, wonderful team of correspondents. I watched on and off a lot of them yesterday, teaching current update. What a great group to be associated with. And our first part of this morning is Global Association News. So with that, I am going to let Brian kind of take the lead and sit here and smile. Look good.
Thanks, Greg. This morning, we want to take the opportunity to introduce you to the editors for the various publications that are produced by the NACVA. We produce a lot of technical journals and blogs. We're certainly well known as an association for exceptional credentialing with the CVA and the MAFF, and also very well known for producing great conferences and continuing education, workshops, webinars, this conference. But similarly, we invest a lot of our resources into publishing. And this morning, we'll take a few moments to introduce you to the editors of our various publications and resources, technical resources, so that you can get a sense of what the publications are about and how you might get involved. We're always looking for individuals who are interested in authoring articles in the various platforms, which we'll discuss and review here. Or if you know of a great topic or have a colleague who is a great writer, we certainly would appreciate you introducing them to the NACVA and our editors, because there's plenty of space for this technical content to be shared. It'd be great if all of our panelists could go ahead and share their cameras, but we'll start this morning with Dan Schifrin. Dan Schifrin is the editor of the Value Examiner. He came on board with us just last summer. The Examiner was previously edited by Nancy McCarthy, who produced and managed that publication for a number of years. We're so appreciative to Nancy for all the work that she did over the past several years to continue building the credibility and the esteem of the publication. The Value Examiner is a multiple consecutive year recipient of the Apex Award, which is highly recognized and respected in the world of publishing. The Examiner is an award-winning journal, and Nancy has done a great job, or did a great job, maintaining that publication, and we're super excited to introduce our new editor, Dan Schifrin, to the magazine of the journal. Good morning, Dan.
Good morning. Thanks, Brian, and good morning, everyone. I know we have a very limited amount of time, so I'll try to make this quick, but you know, one of the unique things about the Value Examiner I've learned in my 9 months or so being involved with the publication is that it's sort of a hybrid between a professional development journal and a more academic journal. And I think that's a really good thing, but I have learned from talking to subscribers and members of the editorial board that readers would like to see more practical articles. We'll certainly continue to try to have a mix of sort of theoretical and practical articles, but that's something that many people have told me they'd like to see more of. So in light of that, I encourage everyone to consider submitting an article. There's a lot of benefits to writing for the Examiner, in addition to the prestige of being published. You receive a PDF of your article that you can post on your website or distribute to your clients and prospects and referral sources. You also earn CPE credit for the time that you spend writing the article, as well as NACVA credit vouchers, also based on the amount of time that you spend. If you're not sure what to write about, one thing I encourage people to do is to consider putting together a case study about an interesting engagement that they've worked on recently. I think case studies are a really powerful way to educate your peers, and several readers have told me that they'd like to see more of those. If you are interested in submitting an article, we've made it really easy to do that online. We're now using a journal management platform called Scholastica. And actually, I'm going to send everyone a link to the Value Examiner's author page on Scholastica. When you go there, you can find a pretty detailed list of topic ideas, as well as editorial and submission guidelines. And then even if you're not interested in actually writing an article for the examiner, I'd love people to contact me and just suggest topics they'd like to see covered, or provide feedback on previous issues. So that's all I have. Thank you for having me, and back to you, Brian.
Thank you, Dan. And again, welcome to the Examiner and to the NACVA. We appreciate it and certainly look forward to supporting you and continuing the long legacy and history of the Examiner. But do we have John Derimiges with us yet?
Yes.
John, good morning.
How are you, Brian?
I'm good. How are you?
Very well, thank you.
All right, you're live on the air with the Around the Valuation World.
Got it. Good morning, everyone.
Good morning. Tell us about the quick read. So for all of you, we'll quickly back to the Examiner, just really for just one quick second. The Examiner will not be mailed to you if you're a member and you're used to receiving the Examiner by mail. It will be delivered virtually through the rest of this year by email or by logging into your account at nacva.com, where you can access the current and past issues. The coronavirus has certainly relocated a lot of people to different places, from their main office to their home. And to ensure that everyone receives it, we will be producing it digitally and online. And also you'll be receiving emails when they're posted. So check at your account at nacva.com through the rest of this year to access the Examiner. The quick read is published every Thursday. Today you'll be getting your copy if you haven't already. And John Derimiges is the editor of the quick read. Good morning, John. Tell us a little bit about quick read.
Well, good morning, folks. I'm senior editor of NACVA's Quick Read. For those of you who aren't familiar with Quick Read, it's a weekly online news and information highlights in areas of interest to the financial forensics consultant and also for immediate use in your practice. Specific topics covered include business and intangible assets valuation, litigation, consulting and expert witnessing, healthcare consulting, mergers, acquisitions and exit planning, fraud, risk management, forensic accounting, estate planning, other related areas of interest, and anything trending or hot topics in the industry. I welcome you all to consider writing an article for publication. A typical article runs around 1,500 to 2,000 words, or 3.5 to 4 type pages. If it's longer, it's published in 2 or more parts running in consecutive weeks. When an article is submitted, it's reviewed for technical content and then edited for style and formatting. It's then returned to the author for review and approval prior to publication on Quick Read. The article needs to be submitted in Word format with a short bio and some contact details. If it's been previously published, if it's been published elsewhere, we'll need proof to republish it with the preferred verbiage and it's used in the citation. A member of your firm may be interested in writing an article if you're not. If at the time you may not be have the time to write, but or you may have a colleague who's interested in writing and has an article already for consideration. I'm very easily be contacted. On my details are on the NACFA portal, or Brian or anyone at NACFA can provide you with my contact information. And I really look forward to a conversation with you. So with that, Brian, I turn it back to you.
Thank you so much. Did you hear that bling, everybody out there in the NACVA Nation? That means a poll question has popped up. It will remain up for several minutes as we will have the same practice through all the sessions you're attending. There'll be that audio chime, but the poll questions will be up for several minutes, so be sure to respond to those in order to receive your CPE credit. Next, we will visit with Dr. Larry Crumbly. He is the editor of the Journal of Forensic and Investigative Accounting, a journal that is published and distributed in cooperation with the NACVA and Texas A&M University, Corpus Christi, and Louisiana State University, Orso College of Business, Department of Accounting. Hello, Dr. Crumbly.
Good morning. How are you this morning?
I'm doing pretty good. How about yourself?
I'm awake.
That's a start. Me too. Tell us a bit about the Journal of Forensic and Investigative Accounting.
Well, I am editor of the online Journal of Forensic and Investigative Accounting. Online means it's free. All you have to do is Google my journal. The journal.
Or access it through the NACVA site.
That would be fine. The journal comes out at least twice a year, and often I put out a third special edition. Normally, we have about 9 to 11 interesting and cited articles about forensic accounting, fraud, valuation, litigation services, damages, and other forensic type articles. I do include some book reviews and maybe 1 or 2 case studies. Now, many of the articles are academic. They are each double-blind reviewed, but I do try to publish some practical articles. However, I have difficulty getting practitioners to write for me. So if you have a manuscript or you have an idea, please contact me. Send me a manuscript. My journal is ranked B. Now, in the land of academics, B means that it's good. On the Austrian Dean's Journal list, which is followed by most universities. Now, very few academic journals publish practical articles, and very few practical journals are even listed as a C journal. Thus, there's no incentive for a professor to write for a practical journal. So if you like to get in front of professors, you need to come to my journal.
Thank you so much, Dr. Crumbly.
I've had my time is up. Okay.
Oh, go. Any last words?
Oh, I have a lot of words. If you'll send me a practical or academic manuscript, I will work with you. Keep in mind that if you do get published, you will get before at least 4,000 professors and all of the NACVA email list. That's called consulting, right? Or networking.
Yes. Thank you so much, Dr. Crumbly. As you can see, you can access the current and past issues of the Journal of Forensic Investigative Accounting through this portal under publications at nacva.com. Next, a very important, not necessarily a journal or a publication, but a database of federal and state case law summaries. NACVA has been producing these summaries since the early 90s. And most recently, we have extended to the members of the association through the Econassist subscription through Key Value Data. So included with benefits of membership is a subscription, Econassist through Key Value Data, where you can access several benefits, which we'll discuss here in a moment. But with Kim Tavares, she is the technical researcher and editor of the federal and state case law database. Once you're logged into your account at nacva.com, just scroll down to the left-hand side here under free Econassist subscription. When you click that link, you will enter your email address. Once you do, it will pull you over to the portal at Key Value Data. NACVA members who log in to access these benefits, you'll see through all of these tabs here, databases, miscellaneous resources, and applications. All of these items that are clicked in green are included as part of your membership. So hopefully you've learned about that already and have taken advantage of these benefits. If you haven't, we encourage you to. But this is where you can find the federal and state case law database. And Kim, thank you for joining us. Can you tell us a bit about the work you're doing with these summaries?
Absolutely. Good morning. A very good early morning in Southern California.
Good morning.
Yes. So on a monthly basis, I go in and do some research on some of the cases most applicable in federal and state case law, and briefly write some summaries on it. There's about usually 6 to 9, although cases are very slim in the last couple of months, but I'm responsible for finding 6 to 9 cases that are most interesting in financial and litigation and valuation. And they're uploaded. The actual case is put on the site as well as my summary. And there you have it.
Yes, Kim also contributes to the Value Examiner.
Yes.
For every publication. Pretty soon she'll be supporting also content in Quick Read, but also regularly appears on our monthly Around the Valuation World, where she gives summaries online during ABW to important and trending cases. So this is a very important part of valuation, litigation analysis, needing to have access to these summaries. This database is historical. It goes all the way back to, is it moving? My screen is pretty slow this morning.
Some really old ones in there.
Way back. You can search this database by keyword. For example, gift, tax. So you can search on specific keywords or court citations. And for those of you who are members of the association, you receive access to this database through your Econassist subscription with Key Value Data, which is the perfect introduction to Dave Miles. Dave Miles is with KVD, Key Value Data, and Value Source, NACVA's partner with data and research. Your membership with the NACVA, as I mentioned, also provides you with a Econassist subscription, but there's so many good things here. In addition to the federal and state case law database, you can take advantage of. And Dave, tell us a bit about some of these benefits.
You bet. Thank you so much, Brian. Real tip for what we just saw is if you go in and search by date, you can go back a month or a quarter and keep up to date with your case law simply by reviewing what's most current in there. What I like about Econassist is that it comes with every subscription level inside of Key Value Data, as well as it's free. And Brian just took most of my stick and said, here it is, but he showed you how to get into this. Other items on here are archived industry and databases, archived industry metro reports, S1 filings, compensation data, expert witness profiler. There's all kinds of databases on here that I consider not necessarily primary sources for an engagement, but secondary sources. What do I need to plan an engagement? What do I need to supervise an engagement? What keeps me up to speed? And all of these items on here, you know, valuation articles, conference presentations, they can all help you either dig down into a topic or keep you up to speed as to what's going on. And that's my 2-minute spiel, Brian.
Thank you, Dave. If any of you have questions about key value data or any of the resources, you can certainly reach out to our headquarters staff or Dave himself. But we do encourage you to log into your account and find the access portal over to Econassist and start taking advantage of those benefits that are included in your membership. So we work hard to not only publish great journals, but also exceptional education and leading credentialing programs, but we also recognize you need actual tangible benefits to strengthen your practice and your engagements, and you can find and take advantage of those through your Econassist subscription. How much more time do we have, Greg? How are we doing on time?
You're out of time.
Oh, we're out of time. Dang it. So we didn't get to Kurt Bowden.
That's what I love to tell everybody, right? You're done.
We didn't get to Kirk Bowden, who was going to quickly let us know about some of the other benefits that the association provides. So I'll just take one quick second to do that. Once you're logged in, take a look at all of these benefits here on the left-hand side. There are marketing resources for you to use. That includes some commercial style videos that you can post to your website based on these areas of practice. We also have some information slicks about the CVA and the math is coming, where you can customize these with your firm name and mail them or distribute them to your clients to let them know about the validity of having a CVA work for them, supporting their area of practice. So in closing, take advantage of all these benefits. Reach out to our editors. Let us know if there's any content we can publish of interest to you. And that's what we really want to do, is to provide you with these resources. Thank you for this extra few moments. And thank you all for joining us this morning. I'll pitch it back over to Greg so we can get to some other great conversations with our guests this morning.
Thank you.
And I've stopped my sharing, Greg, so back to you.
All right. Give me one
And all
second.
our editors, you're more than happy now. You can just pause your screens and we'll move on to our next segment.
All right. We got the right background going again. So good morning, everybody, once again. I will mention I use the census data through the value source data. It's very good for you know, when you need to do compensation, particularly for smaller companies. It's very appropriate. Lots of the other databases, that is really a great resource. So do take advantage of it. Next, I would like to introduce Cheryl Hider. And Cheryl Hider, one of our long-term correspondents. Yeah.
Do you call me old?
We can't be that old. And she is going to interview Dr. Robert Minetti. And they're going to talk about red flags to fraud misrepresentation, a presentation I think that occurred yesterday, but a wonderful recap for everybody to learn a little more about this morning.
Okay. Greg?
You're up.
I'm up. Can you hear me?
We all hear you. We see you. You're good to go. I'm going to tap off, and see my smiling face, you'll know time is up.
There you go. All right. Well, Dr. Minetti, thank you so much for coming on this morning. I noticed there's a lot of initials after your name, a whole lot of them. And let's leave the PI credential aside for a minute. We'll come back to that if we have time. But how would you say your educational and practical experience in financial investigations help you with business valuation?
Well, of course, the first thing is the experience, and having to maintain those CPE credits every year keeps you current on what you're doing. But probably the biggest aspect of the credentials is when you're testifying. When you have a list of credentials after your name, it solidifies your position as an expert in front of the jury. Remember, most of the juries don't know what any of those letters mean, but when they see them and we go over them, and more importantly, when the attorneys, ask the opposing expert, well, Dr. Minetti has this credential, have you passed the exam for that credential? And they have to say no time and time again. Again, it looks good in front of the jury. That's one of probably the main aspect.
Okay. Which credential do you think helps you the most?
I would go with
I was trying to start trouble. You don't have to answer that if you don't want to.
I'm going to be honest. The
Okay.
CPA is the top one, followed by the CVA, the CFE, the MAFF, probably in that order.
Okay. All right. Now, Tuesday afternoon, you had a dynamite presentation on this very topic, the red flags to fraud and valuation. And that, I think your underlying message was, in all cases, valuators need to be alert to the possibility of misrepresentations or other anomalous data. So can you talk to us for a minute about the due diligence that you perform when you're evaluating and analyzing information for your valuation assignments, specifically the procedures that you perform to enhance your ability to identify areas that require additional inquiry?
Well, the key areas you want to make sure you're doing is looking at, the financials, I like to get copies, especially a lot of small businesses are on QuickBooks, and get a copy of the QuickBooks to look for anomalies in the transactions or unusual transactions. Looking at any type of assumptions or estimates. Owners often tend to be very optimistic in estimates that they do. One of the key things that we're looking at in today's society, of course, is what type of cybersecurity is out there. With all the new cybersecurity laws, what are the risks to that business of running afoul of those? And of course, with the shutdown, the COVID-19, the civil unrest, how is that being accounted for in the valuation? And how is that being accounted for in the projections? If a business owner put projections in place in January, those projections aren't going to stand up to scrutiny today.
Okay, fair enough. Let's say you have an engagement that specifically calls for just evaluation, no forensics requested or required, and you start looking through your data and you suspect that it's cooked. Valuation, let's say, is for a bank, and the company needs a certain value of the company, and your projections look overly optimistic, or maybe you have a situation where the expenses look out of line with the rest of the industry. What's your next step?
Well, the next step is to sit down and speak with the owners of the business that have the data, talk maybe to their accountants or bookkeepers, find out what the issues are. You always have to remember, just because you have a red flag doesn't mean there's fraud. It could simply be errors. And many times when I sit down with small business owners, what I found out is it's errors. The bookkeeper will tell me, well, I didn't know I was supposed to do that. And so, the first thing to do is not jump to the conclusion just because you have an anomaly, discrepancy, or red flag that there's any intent to commit fraud. Again, many times the first thing we find out is it's nothing but an error.
Right. Now let's go in the other direction with that. You alluded to this Tuesday afternoon. You're looking at a set of data, and you notice, or you conclude that the revenues are severely understated, and conclude that there's probably tax fraud. What does Bob do next?
Well, at that point, normally I'm going to withdraw from the engagement because I'm not going to issue a report where we have a significant variance, or if they've cooked the books, you don't want to be involved in that. You can go in and try to work with them to correct everything, but the problem is once the fraud's been committed, once you're aware of it, you're going to have to put that, you have to disclose that in the report so that a buyer or a reasonable person looking at that report would understand what was going on. And the owner's never going to want that to be listed in the report.
Okay. How would you feel about their tax filings themselves? Do you feel any obligation to discuss with them amending those returns? Or is
Well,
that
I
outside
always
your
advise
purview?
them that they should, make sure that they follow the law and that we adhere to, the standards that we're supposed to. That's part of making sure that, we maintain the high standards that the NACVA stands for, is that we're not going to support a client who's deliberately out there trying to commit a fraud or break the law. And, though our confidentiality doesn't allow us to turn them into the IRS because we have, confidentially clauses in the engagement letter, so I can't turn them in, I do advise them that they should talk to a tax CPA and revise their tax returns in order to help to avoid penalties. I also remind them that there's no statute of limitations on fraud. The IRS can go back forever.
Okay, now let's go in a totally different direction. You mentioned during the presentation the use of review reports in valuation assignments. So let's talk about those in the context of your everyday work. For those who didn't participate, do you want to just explain the purpose of a review report?
Well, yeah, a review engagement, and that's predominantly the most of what I do is come in and review reports that have been written. Somebody who relied on that report felt, well, it didn't give us an accurate position of the business, or we bought this business and we didn't get the revenues we thought, or the expenses were a lot higher than what they said they were going to be. And the purpose is to go in and review the report and determine, did they look at the data accurately? Were their assumptions reasonable? Did they follow the standards, which is probably the key thing? If the only thing wrong is that, while they had different assumptions, and as long as those assumptions were properly disclosed, that's not an issue for the valuator. But if you failed to follow the standards for putting the valuation together, you took shortcuts or other issues, then that's going to give leverage for the buyer to turn around and seek damages through litigation.
Now, what about in the litigation context? Let's say you're involved in a marital dissolution case and the opposing expert's report is handed to you for rebuttal. And you look at it and you say, this thing makes no sense. Would you then issue a review report in addition to your own valuation in response, or would you simply do a review report or a rebuttal report?
In that case, you'd normally do a rebuttal report, and then you would definitely want to make sure that you found the areas and those were pointed out during testimony to the, in a divorce case, at least in Arizona, it's only a judge. We don't have juries in divorce cases. So you want to point out to the judge where the errors were, and more specifically, where the deviations from the standards were, because that can allow for a Dalbert challenge.
Okay. So you wouldn't separate a review engagement from your primary litigation assignment then, and have a review engagement just consulting type for the attorney to follow as a roadmap?
Well, that is from the way I do the initial engagement. The review of the opposing expert's report is part of that engagement. So for me, it's not a separate engagement. That comes with the standard package.
Okay, so then you do both, is what you're saying?
Right. I issue my report and I review the report of the other expert, go over it with the attorney, make sure I say where I disagree with what they did, if I disagree. Sometimes I don't.
But you don't necessarily issue a review report for those engagements?
That's correct.
Okay, that's what I was trying to get to. When would you issue that review report, as opposed to just saying, this stuff is flawed?
Usually the review report is done as a separate engagement when somebody brings me a review that another valuation analyst did and says, we think there's issues here, the price doesn't stand up, we think that the assumptions are wrong, we think there's issues, and that's when I do an engagement for a review report.
Okay. Otherwise, you just do the standard, attack these areas in cross-examination. Is
Yes,
that what you're saying?
that's
Okay.
correct.
All right. So now let's come back to your private investigator's license. How do you use that in your everyday practice?
Well, some states like Arizona, if you're doing specific types of fraud investigations, you need to have a private investigator's license in order to legally do it. Otherwise, of course, you can get challenged again on a Daubert challenge. You don't have a license, you can't do the investigation. Obviously, you can't testify. So that's one of the big issues. And when I've gotten involved in insurance fraud cases, workers' compensation fraud cases, unemployment fraud cases, you know, those type of fraud cases, especially if you're going out and interviewing people or, you know, searching for hidden assets, is one of the big areas where I've used that, where we're out looking for assets that have been hidden. We have a judgment that we have, and now the attorneys want to collect on it. So they bring us in to look for the assets. And that's a big area where the PI license comes into effect.
Okay. Oh, look who's back.
You know, I always can ruin a good conversation, right?
Nah, you enhance every conversation, my friend.
That, you know, that's what I tell myself before I go to sleep at night. So thank you for
Perfect.
confirming.
Dr. Minetti, thank you very much. I appreciate your insights.
Well, thank you for having me. I sure appreciated the invite.
Okay.
And thank you both.
Greg?
Certainly another informative interview, and it was a whole lot more was covered in the full length presentation. So thank you both for getting up and getting started this morning and working on our show.
Perfect.
Next, we have Michael Gregory is going to interview and discuss with Mark Norris, determining consequential damages in lost business value versus lost profits. I did attend that presentation. I can't quite make them all. Mark covered a phenomenal amount of material in, I believe, 50 minutes. And I am going to let Michael and him discuss, and I will pop back right basically at about the end of the show. So thank you. Thank you both.
Thank you, Greg. There's some information here with respect to Mark. You can see he's a CPA, CFA, ABV, MAFF, and an ASA. And it was my pleasure, too, to attend his session on determining consequential damages for lost business, whether it be value or lost profits. He did an outstanding job. He had 92 slides. So when Greg just said it was very informative, that's absolutely true. And for me, I got so much out of what Mark had to say because of the depth of experience that he has in this area. So Mark, thank you very much for being here today.
Thank you.
We've got a few questions I'd like to ask you in the course of today's session. Starting off from the very beginning, just the basics. What are the definitions of lost value and lost profits?
Well, they're fairly similar. The biggest distinguishment between lost value and lost profits is the period of time that the damage is calculated. Lost value is a measure of the impairment of the value of the business measured by virtue of its impaired cash flow that would have been earned by the company but for the damaging event, present valued assuming the loss is permanent. Now, as I shared the other day, it can be a total loss or a partial loss of the value of the business, depending on the facts and circumstances of the case. Lost profits, on the other hand, is a measure of the impairment of cash flow that would have been earned by the company, but for the damaging event, assuming the loss is for a determinable period of time. That's the biggest difference between the two.
One of the things I'd like to just point out to others is within your presentation, you had two graphics that present both of those extremely well. So it's one thing to hear the verbiage of this, but you want to see some very good graphics to capture what Mark has just said. That's one that you want to download the PowerPoint and take a look at the specific graphics that he has there, and you could use those too. It was very well done, Mark. Thank you.
Thank you.
Second question, is it possible to claim both lost profits and lost value?
It is. again, when the analyst is preparing their analysis, the biggest issue here is do not overlap periods of time. So in other words, if you've got a situation where the damaging event occurred, and let's say the owner tried their best over the next 6 months or so to salvage the business, had to inject capital in the business, working capital to keep the thing afloat, but then at the end of 6 months just couldn't do it. Well, the first 6 months would represent a lost profits period analysis. And then at the end of the 6 months, you could prepare a lost value analysis. Keep in mind that the lost value analysis, the benefit stream to be used at that point would be the but for net cash flow, but for the damaging event. So you could actually have both components of damage for the same company.
The key on that from your perspective is they just can't overlap the two, and that's the key to educate the court too?
That absolutely. It's an area that's many times confusing to a trier of fact. They call it, they'll attempt, or especially the other side, the opposition will try and say you're double dipping. But if you're very clear about differentiating between the periods of time, you should be fine.
Okay, what are the typical lost value approaches that you might use?
Well, lost value, it's back to the basics of business valuation. The approaches would be your asset-based or cost, your income approaches, and then your market approaches. Within the income approaches, you typically consider a DCF model. And then in the market approaches, you could consider a guideline public company, a guideline transaction, and also transactions within the company's equity. I shared the other day an actual case that one of my partners was involved in. It was an international case that was tried over in the Middle East, where it was a complete destruction of the business. And a key component of the analysis was that prior to the damaging event, there was a transaction representing 40% of the equity in that company on an arm's length basis, and that was a key component to the analysis to establish the actual lost value of that company in that case.
By comparison, what are the typical lost profit methods that you might use?
Well, lost profits, you've got the before and after methodology, where you're looking at how the company was operating before the damaging event. Obviously, then, like that chart showed, you've got the dip in the lost cash flow, and then ultimately coming back up to match the higher revenue line. So you'd analyze that delta in time between the damaging event and when they recovered. You've got a yardstick method. The key with the yardstick method is make sure that the projections are objective, that they're comparable to the company that you're doing the analysis for. You've got some sales projection methods, and again, in many cases, what's very useful in your analysis is contemporaneous types of projections, where management on an ongoing basis prepares the projections. You can compare those projections historically to actual results to develop some confidence that the projections are reasonable. And then a market model, which takes a look at potential market share, what the company would acquire in market share.
With COVID-19 impact out there currently, what do you think the impact's going to be on lost value and lost profit engagements? What do you think is going to be happening in this industry going forward? Or do you have any thoughts there?
Well, I read an article the other day just here in the Mid-Atlantic, Maryland area. They're estimating that 25% of the restaurants are going to go out of business. It seems like every week you get an email or some type, read an article of a restaurant that you frequented that they can't make it. And it's not just related to the restaurant industry. I mean, I'm sure most of us read the other day that Hertz Rental filed for bankruptcy. I mean, you never even think that something like that could happen. The fact is that many companies are probably going to go out of business. The biggest issue here, I think, is whether or not any of that lost value is going to be covered by insurance. That's an extremely hot topic. As I shared the other day, I had read that the insurance capital surplus amount in this country totals about $800 billion. God only knows how much really lost value was out there as a result of the partial or total shutdown of economies in various areas of the country. So you've got the lost profit analysis there, and then lost value. Lost value, if you were a manufacturer that provided supplies for the restaurant industry, I think that there's a high degree of probability that you're going to have a permanent lost value in your business if in fact you can continue to do business. So I think there's going to be a lot of work here for experts in our profession to perform both lost profits and lost value analysis in the future.
If you had to say, what are 3 major takeaways from your presentation, what would you want to share with this audience?
I'd say for the basic analysis and definitions, make sure you do not overlap your periods of time that you're doing the analysis for. I also shared there's, if you've been doing this any length of time, you know that there are what I'll call battleground areas in any type of analysis, whether it's business valuation, lost profits. Those are the areas of subjectivity for your inputs and assumptions. I really recommend that you review those areas with counsel so that they totally understand, look, these are the areas that I'm going to be attacked on. This is so you can provide some guidance on, let's say, ranges of value or ranges of loss, and so to avoid surprises. And then the other is just, we have to be objective, okay? You have to make sure that you consider and analyze other causes of damage, because the other side, I guarantee, is going to do that, and also consider mitigation.
So your reputation is key. You've gotten to where you are over the years being an expert in this area. Any thoughts for folks that may have an interest in doing this, that haven't done this previously? Any advice to them as to what they might want to do?
Well, I mean, NACVA's got, just a lot of seminars and sessions and information. I got to tell you, I've shared this with other folks quite a few times. I personally think that NACVA kind of is the organization that provides practical information, education, and so on for somebody that wants to get in this business, much better, quite frankly, than other organizations that provide other credentials behind my name. And I've said that for many years.
Well, thank you very much for being with us today, Mark. I'm going to pass this back to you, Greg. Appreciate your commentary, and I certainly encourage you to take a look at his session that was on Tuesday afternoon. You did an outstanding job and great PowerPoints. Thank you so much, Mark.
Thanks so much.
Thank you both. It was a wonderful presentation, and that was a very good representative interview. All right, you took control back, Brian. I think I was going to go to my slide about the good deal. That was such a good deal that I need my glasses for it.
You're killing me with those shades. I love it.
These are awful.
No, they're pretty cool. Thank you, everyone, for joining us as panelists this morning. And we appreciate your sharing your insight and knowledge and quickly with us through this segment. We do produce Around the Valuation World every month. If you're a member of the NACVA, you can view ABW. If you'd like to earn CPE as a member or non-member, you can subscribe, where you can earn up to 27 hours of CPE in an annual subscription. It's currently on sale through the NACVA. And the dates that we offer the show are on the website as well. Mark also in his segment touched on some really good content related to damages, particularly spoke to business interruptions and lost profits. what we have also on our website, which we've been producing almost weekly since April, are a number of resources relating to COVID-19 and valuation specific to that. There's a lot of content that we've produced and available and posted on this page. So take advantage of all this good content we published relating to COVID. We have more topics coming. These topics will be, these sessions by webinar will be free and you can earn CPE. One of the topics that Mark touched on are specific to business interruptions and lost profits, and so much good stuff here and more coming. In fact, we're pleased to be working again with the American Society of Appraisers, the Chartered Business Valuators Institute, our global association, GACVA, and the Royal Institution of Chartered Surveyors, RICS. We will join together again to produce a virtual town hall in July. We've just started the coordination of that event between our organizations, and that will go live in July. So check back to the site regularly to take advantage of these benefits and these resources to keep you up to date on COVID-related topics. Greg?
Well, I think you kind of said it all. Like I said, it's that's special at $199 for all the continuing education and all the people we bring on the show. It's, you know, so bright I've got to wear these awful glasses.
You're killing me with those shades, man.
I know. And I think with that, it's time to thank everyone for attending the conference, attending our first thing in the morning show, and for everybody, both staff and our correspondents and our guests, the people that really make this show happen. And we look forward to seeing you generally the third Thursdays of every month. I mean, the third Monday, I don't know where Thursday came from, the third Monday of every month. We look forward to seeing you at Around the Valuation World.
Great. Have a great day, everyone, in the conference, and we'll see you soon. Enjoy.
Bye-bye now.